G'day folks, Jim here from FX Charts. Welcome, Monday the 29th of September. Well, it was another big week for the dollar bulls. I don't think we should expect anything too different this week either. The highlights are going to be the ECB meeting on Thursday, at which Mario Draghi is probably going to be fairly dovish about the outlook for the EU. That'll put pressure on the euro. And then we've got the non-farm payrolls on Friday. We're expecting a bounce, a decent bounce back from last month's poor reading, so that should also underpin the dollar. So I think it does look a bit like one-way traffic at the moment. Ahead of that, we've got on Wednesday, today we've got the German CPI and tomorrow the EU CPI, and then on Wednesday the global manufacturing PMIs. So none of it bodes all that well for the euro, I don't think. And we'll go and have a look at the charts. Okay, we'll have a look at the dollar index first. Now, this is a weekly chart, as you can see, and although the dailies are now becoming overbought, the weekly MACDs are still trending strongly higher. The RSIs are looking a bit toppish, but right now there's no real reason to panic, I don't think. But it should be pointed out that this blue line here is the 76.4% FIBO. The whole move down from 89.60 down to 72. Now, if that holds, and we're right on it at the moment, 85.60 or so, 85.65, we could see a bit of a retracement back down towards this this trend line, which has now been broken. That went back to 2005. So we could see a bit of a retracement back down here to this 84.90 level, which pretty much ties in with this previous top here at 84.75, which acted as strong resistance for a fair while. So I do think there's a chance of a bit of a retracement, but the longer term run definitely remains higher for the dollar. And once the 85, 65, 70 area gets taken out, there's not an awful lot to stop us heading well, firstly to this descending trend resistance, I should say. Now that's at about 87.80, and then we're going up here to this level here around 88.30 and back up to 89.60. Now this descending resistance here, as I'll show you in a second on the monthly charts, that's very important. This goes back all the way to 1985, I think it was. Just have a look here. Yeah, so we can go all the way back here to 1985, March 85, and that's coming in here at about 87. I think it's about 87.50, 60, something like that. While to go to before we get there, but that depends on breaking the FIBO resistance that we've got right here. So keep an eye on that. But the dollar index is leading the charge higher, and the monthly indicators are all looking pretty positive to me. So I think any dips that we see in the dollar are likely to be fairly shallow. So moving forward to the euro, right? Well, as you can see, the euro's more or less in a steep descending trend, and there's really been very little bounce at all. That's a 4-hour chart. If we go out to look at the dailies, we've broken some major trend support here, which we'll have a look at on the longer term charts in a second. But it looks to me as though really having taken this line out here, once we get below 126.60, which is this low back here in November 12, 2012, there's not an awful lot to stop it heading all the way down here to this FIBO support at 125.04. Now that's a daily chart. If we go further out to the weeklies, you can see that there, and the trend resistance, trend support that's been broken now acts as resistance. That's up at around 127.75, but you can see it best on the monthly chart, and it does look to me as though there's still a fair bit on the downside to come, and I think we're probably heading back down here to this 200-month moving average at least, and that's at about 122. Resistance on the top side, well, first of all we need to regain 127, and it's looking pretty heavy at the moment. It's down at 126.70, about to take out that 126.60 support that we've just mentioned. But if we can get back above 127, this resistance here, so 127.65, that may cap it for a while. We've got the 100-hour moving average at 127.85, and then the descending trend resistance and the 200-hour moving average up at around 128.40. I really don't see it getting up there at any time soon. But you know, if we're wrong, look to sell rallies. It does have to be said that the 4 hours are heading lower still, but they are becoming somewhat oversold. The same really applies to the dailies up to a point, but the RSI is looking, you know, as the stochastics, I should say, looking a bit oversold, and the RSI is showing some divergence. So we could well see a bit of a bounce, but I really think that anything meaningful, we just sell into it, because I'm fairly convinced that eventually we're heading back down towards the 120 area, but that could take a while yet. Dollar yen. Much the same. Dollar yen's just it got up to 120, so 109.53 on Friday. Was unable to hang on up there. This is an hourly chart, and it's just testing and playing around with 109.5 right now. That's the trend high on the 4-hour chart. Really, we actually need to go right out to the monthlies, where, as you can see, we're sitting right up against strong resistance. But if we do take that out, if we take that resistance out, then this 110.65 top from about July 08, and then 112.5, the 76.4% FIBO resistance of the fall from 123.5 down to the lows back up here. That'll act resistance. In the longer term, I think dollar's going a fair bit higher than that, and eventually I do think we're going to probably come up to this, or 124. That's going to be a while, and we should expect some corrections, but the way the central bank policies are playing out, I do think they're going to be fairly shallow. Let's go and have a look at the 4 hours here. If we got back down, hit towards this low of last week, this 108.5, and then below there we got down to 108.25. That's been pretty solid over the last couple of days, and it doesn't look as though the yen is going to see much of a correction. But if we do head lower, then we could get back to this, or 107.50 area, where the rising trend comes in. But anywhere down around here, I think, is probably a very good buying opportunity for an eventual run to the top side, possibly a fair bit higher. Sterling, that's looking a bit heavy. It's taken out some stops this morning below 162.30. It's sitting right on there now. If the euro stays heavy, as I think it will, sterling's going to get dragged down with it, or I think sterling will outperform on the cross. And euro sterling will head lower. We're looking for 70. It's currently at 78, but we're looking for sort of 77.5 really. That's the previous low, and eventually here cable could go back to this 160 area, and then eventually down here to the where it's 160.5, where it fell steeply just before the Scottish vote. On the top side, I'm not sure how much. 162.90. This 163.30, where the 100 hours crossing the 200-hour moving average, I think that will provide good resistance. Dollar Swiss, trend highs 95.20. I'm looking for a run up to the top side here, where we're going to this 95.65 area, the 76.4% FIBO resistance. Eventually, I think we're going a fair bit higher, and 97.5, maybe 98.5 eventually. Support at the moment, 94. Well, 95 is going to be the initial support today. Further out, we could get a dip back towards this sort of 94 area, but once again, I think it's a buying opportunity. The dailies are becoming a little bit overbought, but they're not showing any signs of turning around. The weeklies also looks to have some very good momentum to the top side. So I think eventually we are heading north. The Aussie, now the Aussie, where are we? The Aussie's making new lows right as we speak. It's down at 87.30 now, so I only updated this half an hour ago. So 87.27 down at new lows. They're all going to need updating, unfortunately. There we are. So resistance in the short term, should we see a squeeze, comes at this 87.70 level. If we go above here, 88, if we go above 88, then we could see a bit of a squeeze back towards these sort of lows here, 88 sort of 30, 88 50, possibly up to the FIBO resistance at 89, but it doesn't look like we're going to get there. The dailies, well, I think we're heading down to 86.60, and if I take you out to the longer term charts, it's looking very ominous. Let me just show you this monthly chart. Now, if I'm right, this is a monthly chart. we've got potentially the biggest of head and shoulders top that you're likely to see for a while. The red line here is the neckline, and we're just breaking below that. Now, I don't want to alarm anyone, but from that top to here, if you took the equidistant move, then we're looking at 89 3/4, 89 and a half, sorry, 59 and a half, I should say, down around here, which would tie in with this sort of 60-cent low going back to October 2008. So I don't want to alarm anyone. The RBA would have a smile on their face, but not many Australian holiday makers would. But the Aussie looks to be in quite serious strife to me, and I think we could have a fair bit of downside ahead of us. The same would apply to the Kiwi. Now the Kiwi hasn't followed the Aussie lower yet this morning, but it's not looking very clever. The short-term charts are still intact, so 78.60. We're down around there, but we're right at the bottom of the channel here, as you can see. Now, the dailies are becoming the shorter. The dailies, the stochastics, and the RSIs are becoming oversold. The MACDs, though, are pointing lower still. Now, having taken out some strong support at around 79 and broken lower and closed below it over the weekend, it does look to me as though we're taking out a bit of a neckline here. It's not really head and shoulder, it's more the base of the channel, this long-term channel that we've been watching. Now if we do break that out, break below there, we're heading down here towards possibly this 76 and three-quarter level, and below that we're going to 74 and a half, and the base here is 73.6. So I think there's a fair bit of potential on the downside. The weeklies also, though, are becoming oversold, so just be aware of that. We could see a bounce, but the slower moving MACDs are pointing lower still. So that's about it from me this week. As I say, I think you've got to stick with the US dollar. There's a lot going for it, and the data seems to be steadily on the improve, while the EU certainly looks to be going in the other direction. The stronger dollar is going to push commodity prices lower, which is going to undermine the Aussie and the Kiwi, I think, a little bit. So all up, I think we're actually in for a decent trend, and I think there's a long way to go in this yet. So it's worth keeping an eye on. There's plenty of action going on the crosses and in the commodities as well. So if I get the time, I'll do a video on those later in the day. But as far as today is concerned, look out for we've got the EU consumer confidence, the German CPI. There's some US personal income and consumption expenditure data, pending home sales, and the Dallas Fed. So there's a fair bit to watch out for there, but it'll be the German CPI that stands out, I think. So that's about it for today. Have a very good one, and we'll talk to you later. Bye.